What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today we had another huge volatile sell-off in the stock market as we continue to see the stock market correction roaring on. The question now is, how low can we go? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we did have another very volatile day of selling, and we did see SPY closing 1.67% lower, and we did open a huge gap above that won't close until SPY gets back up to 441. So this market is very volatile, and there's a lot of things that are going on currently that do tell you we could be going into a deeper stock market correction. Now, the first thing to note is anytime you get a gap down or a gap up, that is a very impulsive move, and we did see a huge gap down this morning. We didn't even start to close that gap yet, so there's still a ton of room to the upside for the bears to use that gap as resistance. Now remember that gaps typically get filled, but there's no guarantee in what time frame, and we still do have this gap way down here at 411. So right now it's the battle of the gaps, and there's no guarantee we have to go higher and close the upper gap before we go lower and close the lower gap. So the number one support level I want you to pay attention to is right around 432. If SPY starts closing below 432, it's very likely we're coming down to 425, and below 425, the next support level will be 419. Below 419, we're definitely closing that gap at 411 before we go any higher. So those are your very critical support levels, and as you can tell, these support levels are very far apart, and that's because it is a very volatile market, and you're more than likely going to see the elevator down if we continue to see selling. Now, the good news for the bulls is that there was a lot of buying the dip at the close, and as you can tell, there was a ton of volume today. We see a huge wick to the downside, which tells us there was a lot of buyers of the dip. And if I switch this over to a 4-hour candle, you can see that the second half of the day was dominated by buying and not selling. So this could be possible that a lot of buyers are already stepping in and buying this dip, and we're very likely coming to close this gap very quickly right here at 441. Now you can't say that for sure because it's still way too soon to know, but right now, as long as SPY's holding above 432, it could be a great support level to take on some risk for that gap close at 411. Now going back over to the daily chart, now that you know a lot of that volume was buying and you see that wick well below that support level, you can now use that support level to take on some risk going into tomorrow's trading session. You'll still have resistance at 437.5, and the gap fully closes at 441, and we still need to break above 446 and 449 to start going back on the bull. So there's still tons of room to the upside for the bears to use as resistance, and the bears are absolutely going to use resistance to short this market because we are in a short-term downtrend. If I switch this over to a 1-hour chart, there's no way you can look at this chart and see anything other than a downtrend with lower lows and lower highs. So there's no reason to get overly bullish while you're in a downtrend, so don't get overly bullish in a downtrend. It's really as simple as that, and we're in a downtrend until we're not, and we have a lot of room to the upside that we need to start closing above before we can break this downward trend. So in the short term, you need to be bearish, and in the long term, we need to watch these critical support levels, knowing that we have a gap down here at 411 and a gap up here at 441. Be patient and let the price action do all the talking, and you want to watch these support levels very closely to see how the price action is reacting. Another thing to note on the price action is we did close way below the lower Bollinger Bands, but those will start to expand very rapidly. Typically, if you get too far outside the Bollinger Band in either direction, you will retrace to the opposite direction. So the fact that we're closing below the lower Bollinger Band does favor the bulls for a retracement back into this gap. There's no guarantee we have to close all the gap. We could close some of the gap and leave some of it there as the bears short the market and we continue to head lower. So anything is possible in this market, and I know you don't want to hear that. You want the answer of exactly where this market's going, but it's just not that simple. And when you get into a volatile market, you need to watch the price action, and you need to know every single trade you're taking, the exact entries and exits that you're going to have. Volatile markets can whip you in either direction, so even if you're a bear or a bull, you could still lose money even if you get the direction of the market correct. There's going to be volatile swings in both directions, so know your levels and watch your price action. On the NASDAQ 100 triple Qs, we were down 2.17% today, and we see the triple Qs closing below the 50 EMA, so we did lose that critical support at 368, which was also the gap close. So we filled the gap at 368, but we lost a critical support level. We did open a brand new gap above that won't fill until we go back up to 372.8. So it is just like SPY with the gap above that still needs to be filled. And on the triple Qs, the gap below is way down here at 323. So the triple Qs also closed below the lower Bollinger Band, and we did find support right around 362 intraday, and we still do have strong support at 360. So watch 362 and 360, and if we lose those, we could be coming all the way down to 354. 354 is another strong support level, and below that the floor falls out and we have very little support until we go much lower, possibly all the way down here into the low 320s. Now just like SPY, you can see there was a ton of volume today, but if I switch it over to a 4-hour candle, you can see the second half of the day was dominated by buying and not selling. So that could tell us we're going back into a buy the dip scenario, and those buyers did start to step in at the second half of the day. So watch for that buying to possibly continue into tomorrow's trading session and see if we can break back above 368 to possibly close the gap above. If we close the gap, we still need to close above about 379 to start going back into a bull market. So there's still a ton of resistance to the upside that the bears are going to take advantage of. If we lose 360, look for 354. And if we break above the gap at 372, you're looking for strong resistance right around 378.5. On the Dow Jones, we were down 1.81% today. And again, we got another gap down, weak looking candle on the Dow Jones. But again, it's the same exact story as SPY and the triple Qs, with buyers stepping in at the second half of the day. We closed below support right around 340. So your next support level is 336.8. And below that, we could come down to close this gap down here right around $332. To the upside, the Dow Jones needs to close the gap at 345, and we need to start breaking back above 348 and 351 to start reversing the downward trend. Just like I said with the other indices, we're in a downtrend until we're not, so there's no reason to get overly bullish. If we close the gap, it's possible that's another lower high and we're going to continue to go lower, so stay disciplined and watch the price action at these critical levels. On the Russell 2000, again, very same story. We gapped down and left a gap above, and the Russell 2000 gap closes right around 220.5. To the downside, we have that strong support level at 215, which did hold up. And below that, we have strong support right around 212. Below 212, we'll likely see the floor fall out in the Russell 2000, and we're going to see a full-blown bear market in the Russell. So that is a strong support level, and it's definitely a line in the sand that you want to pay close attention to. We need to see the Russell 2000 closing the gap at 220.5 and then breaking back above about 224 to start reversing the bear trend. There's strong resistance on the way there at 219 and 222. So watch those strong resistance levels closely. As you can tell, we're developing a lot of bearish trending, so if we start losing critical support, the Russell 2000 will very likely go into a bear market and we could see much lower prices. On the ARKK ETF, we were down over 4.4% today, but we did hold up above that support level at 115.5. Now the ARKK ETF is chopping around and going sideways, and we don't have a trend for the bears or the bulls, but we're definitely developing some bearish trending. And if that 20 simple moving average crosses below the 50 EMA, we'll have a full-blown bear trend. So by far the most critical support level for ARKK is right here, right around 113.8. And below that, we do have another support level right around 112.5. But it's very likely if we lose support right around 113, we could come all the way back down to 109 or 106. We'll likely have the full bear trend, and we'll likely be going into a bear market if we do see that price action. To the upside, we need to break and close back above about 121, and we could be looking bullish yet again. And above that, we'll have resistance right around 123 and 126. So ARKK is very choppy and it could go either direction, so watch those critical levels and pay attention to see if we get the full bear trend. On the VIX, we were up over 23% today, and we finally did see the confirmation in the VIX that we are going through that full-blown stock market correction. Now with the VIX, it doesn't tell you how deep the correction is going to go, and you need to continue to watch the VIX closely because the VIX could get crushed and we could see the market starting to recover very quickly. SPY has not had very deep pullbacks this year before it goes right back to all-time highs, and for now we have no idea if this is going to be any different, but we do see the VIX starting to make a higher high, and the VIX is in a full bull trend. So the VIX could be hinting at a full-blown black swan event for all we know, so you need to continue to watch it, and we do have a gap to fill at 21.5. So 21.5 on the VIX should be a strong support when that gap fills, and we could continue to see the VIX going higher, and we still do have support at 20. Remember, the VIX did close above 23, so we're not out of the woods with volatility, and for all we know, volatility is here to stay for a long time, so you still need to be very defensive now that we have this elevated VIX. As long as the VIX is above 21 to 20, I would stay very cautious and don't just assume that this correction is ending, even if we do get a bounce. It's very likely a bounce is going to get shorted and sold into, and we could continue to go lower. We need to see the VIX getting back below 18.2 to get bullish on the stock market yet again. On Bitcoin, we're currently down about 7.5%, and we do see Bitcoin holding above that critical support level at 43,000. Remember, the critical supports were 45,000 and 43,000, and below that, we could see Bitcoin retesting that $37,500 support. Below 37,000, Bitcoin will look like it's rolling over, and it could be coming all the way back down to that key support level at 30,000. We need to see Bitcoin breaking back above 48,000 to start going back into a bull market, and we need to see a new daily high above 53,000 to potentially see new all-time highs this year with a strong resistance at 58,000. So watch that key resistance at 48,000 for the hints that we could be going back into a bull market. Otherwise, look for critical support at 43,000 and 37,500. We no longer have the bull trend, so it's going to be choppy, so you need to watch the price action at these key levels. On Amazon stock, we were down just over 3% today, and we did see Amazon bouncing off of that support level right around 33.11, and we did see that 20 simple moving average crossing back above the 50 EMA. However, we don't have the full bull trend because today's price action was so bearish. We did see the 5 crossing back below the 13, and we did open a new gap above right around 34.52. So now you have strong resistance at 3,400, which was old found support, new found resistance, and the gap close of resistance right around 34.52. So very quickly, the price action on Amazon is flipping around, and this could still just be a pullback before Amazon goes back into a bull market and comes up here to close this gap at 35.80. So the key support level Amazon needs to stay above to remain bullish is 33.11. If we lose 33.11, this is going to be looking a lot more like a bear market, and we could see Amazon coming back down to the low 3000s, and we could even lose those support levels and continue to go lower. So this isn't the time to be guessing. Watch this key support level at 33.11, and the key resistance levels are 3,400 and 34.52. Above that, look for resistance at 3,500 and 35.52, and the gap close at 35.80. On Tesla stock, we were down 3.86% today, and we did see Tesla closing below that support level, below the 20 simple moving average, just below 732, closing right around 730. We opened another gap above that won't close until we get back to 750, and Tesla does still have the full bull trend, and we're sitting right next to a very critical support level right around $732. So it's very likely Tesla could bounce from here and close this gap very quickly at 750, and we need to break back above about 755 and break out above 765 to get to our next price target at 800. If we lose the key support level down here right around 709, we're very likely coming back to 692, and if we lose 692, look out below because we could be coming all the way back down to 658 or 626, and we will lose the bull market. So watch Tesla's price action very closely if we continue to go lower, and look for that strong support level right around 709. On Apple stock, we were down over 2% today, and we did see Apple opening a gap above right around 146. Now it's very likely Apple is going through a full-blown correction because we did hit that price target at 157. We lost the key support levels, and the last critical support level before we close the gap is right around $142. Below that, look for the gap close at 137, and then we possibly could see the Apple correction ending, and we could start to go higher. We lost the bull trend many days ago, and we're losing critical support levels, so don't just buy the dip blindly thinking that Apple has to go higher. There's a gap above, but there's also a gap below, so don't just assume one has to fill before the other. Watch that key support level right around 142, and below that, you'll know the gap at 137 is likely going to fill first. Otherwise, we could bounce from here and fill the gap at 146 as soon as tomorrow. So stay flexible in this situation and watch the price action because you don't want to do any guessing in a volatile market. We could go much lower, or we could bounce from here and form another lower high and continue to go lower. We need to break all the way back above 151 to even consider the fact that Apple could be going back into a bull market. On the financial sector, we were down over 2.7% today, and we did see a little bit of a gap down, which did leave that gap open above. So there's a huge gap to fill above, and after we fill that gap, we could see the financial sector continuing to go lower. We're building up bearish momentum, and the price action is below all the moving averages. The industrial sector was down 1.47% today, and again, the price action and the trend are looking awfully bearish. We did open a gap above that could get filled, but again, it could just be another lower high as we continue to go into a bear market in the industrial sector. The healthcare sector was down 1.39% today, closing below all the moving averages, and we're starting to see the bear trend starting to develop. If the healthcare sector can't get back over the 50 EMA, we could go into a bear market. The energy sector was down 4.22% today, with the price action below all the moving averages, and we do have a full-blown bear market coming very soon if we do see these moving averages cross to the bear side. So the energy sector needs to bounce back over the 50 EMA very soon to prevent itself from going into a bear market. So jumping back over to the S&P 500, this is not the time to be doing any guessing or not knowing how you're trading this market. Know all of your entries and exits and know your support and resistance levels, and make sure you have a solid trade strategy because this market will be very volatile and it really could go in either direction. Right now you have a gap below and a gap above, and you don't know which direction wants to fill that gap first. So you need to watch to see as early as tomorrow where the price action is going to take the S&P 500. This is starting to look like a dead cat and we could see a bounce, So don't get fooled or bull trapped if we see another lower high before we continue to sell off more. Watch for that lower high, lower low situation, and as long as you're seeing lower highs and lower lows, you're in a downtrend and there's no reason to be getting overly bullish. This stock market correction could just now be starting and we could have significant more downside to go. So don't get overly bullish just because you see a dip. This market has programmed you to buy the dip for many, many months now, and I can't stress it enough that in a stock market correction or a bear market, sometimes the dip just keeps dipping and you'll suffer severe losses or at least a very emotional roller coaster riding the market much lower. So wait for that confirmation breakout of a key resistance to let you know that the downtrend is over. Otherwise, we are still in a stock market correction until we're not. Play it day by day and be objective and follow the price action and the trend. And right now, the price action and the trend are very weak and tell us that we could be seeing much lower prices. Don't forget, I also have my own trade alert service that only trades TQQQs, and it does very well in all market conditions, but exceptionally well in volatile markets like we're currently in. You get all of your buy and sell alerts directly via email and text message, and I'm currently running a 50% off promotion code for your first month, so now could be the best time to try out BANC trade alerts. If you're interested in joining or learning more information, you can find out all of the details by clicking on the links in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.